Hi, everybody. This is Peter Schiff. This is Tuesday, April 2nd, 2010. Well, it's Good Friday today in observance of the holiday. The stock markets in the United States were closed. But we did get an economic release. The monthly March non-farm payrolls came out. The economy gained, I think, about 160 some odd thousand jobs during the month. Of course, most of the pundits who were on the financial networks today were talking about the good news. The economy is gaining jobs. I don't see it that way. First of all, almost 50,000 of the jobs were census workers. And, we'd be better off without those jobs. We have to pay the salaries of these census workers. They don't produce anything of real value. And meanwhile, the government is broke. The money to pay the census workers has to be borrowed. So as taxpayers, not only are we paying to hire census workers, but we're paying the interest on the money that we had to borrow to hire them. And of course, the vast majority of the jobs that we've created were in the service sector. Unfortunately, those are not the jobs that we need. We need jobs in manufacturing. We need to create hundreds of thousands of manufacturing jobs per month. But that's not going to happen with all the government rules and regulations and taxes that have made manufacturing uncompetitive in the United States. And, I debated this issue a little bit on Fox this morning, on Fox Business. You'll probably be able to see that clip somewhere on YouTube later today. But the person I was debating said that, we don't need those manufacturing jobs, that they're low value added, that it's better that we do those jobs in China. I mean, what do you mean we don't need them? We've got millions and millions of unemployed Americans. Why can't they be working in factories? Those are good jobs. The reason is because the U.S. government has made them uncompetitive. He mentioned that Apple makes a good profit by manufacturing everything out of the country. Sure they do. But the problem is the country would be better off if Apple manufactured everything in the country because we have a huge trade deficit. But the reason Apple can't do it is because of rules, regulations, and taxes imposed by the government that I want to abolish. Anyway, as I said, you can see that that clip on YouTube. Also, during the week we had very strong stock markets all around the world, particularly the emerging markets, which are leading the way. The gains there have been pretty remarkable. The dollar continues to be somewhat firm, although not against all currencies. The strength of the dollar is mainly against the euro, which is mainly euro weakness, not dollar strength. But again, I think it is misguided. The world is still focused or preoccupied with European problems, which I think are far smaller in the scheme of things than the problems in the United States. But I think before too long, people will be focusing on them. One thing I mentioned, I read an article, I think it was a couple of weeks ago in Business Week, that talked about MBA students increasingly taking jobs overseas. It mentioned that the number of MBA students doing that had doubled over the recent years, and that top MBA students, rather than wanting to go to Silicon Valley or Wall Street, what they really want to do is get jobs abroad. And in the article also mentioned the fact that the most eager to leave the country are children and grandchildren of immigrants. And the irony is they want to leave the country for precisely the same reason that their parents came to the country. They're looking for opportunity. And so many people are moving back to China that the Chinese actually have a word to describe American Chinese who are returning home. And the word literally translates into sea turtles who always go home to where they were born to lay their eggs. This is something I actually predicted would happen in my book, The Little Book of Bull Moves and Bear Markets. Interestingly enough, today I read an article about Mexicans leaving California because there's no work there. They're going back to Mexico because they think there's better opportunities there than the United States. So things are really unraveling, and it's unfortunate that our leaders haven't figured this out. A couple more major mistakes that were made recently. One involves student loans. We've talked a lot about healthcare and the fact that the healthcare reform is going to make the situation worse. It's going to lead to even higher healthcare prices, even higher insurance rates, and ultimately rationing of services. Well, the government has made the same mistake with student loans. I've criticized on my blog before, and you can look at it, why government-guaranteed student loans have driven college tuitions through the roof. Well, with the new plan that Barack Obama slipped into the health care bill is actually going to make it worse. The government is ending student loans, but instead of just ending them, they're going to transfer the function to the federal government. Now, the craziness behind this is Obama says that the reason that student loans are expensive is because the banks are making a profit on them. And if we can take the profit out of it by letting the government do it, it'll be more efficient. Well, that's a pure Marxist argument. When you take the profit out and you put the bureaucrats in, you actually take all the efficiency out of it and you get even higher costs, which is what is going to happen with this socialist plan. But also, what happens right away with these new government directly providing student loans is the government actually has to loan the money. It's not just guaranteeing private sector get. The government doesn't have the money. The government actually has to borrow money to then loan it to students. I mean, how ironic is that? We're going into debt to make loans. And of course, the first thing these loans are going to do, the president says that now instead of having to, when you graduate, instead of having the loans capped at 15% of your annual income, they're now going to be capped at 10%, and the balance will be forgiven in 20 years, not 25. In other words, the government is telling students that they're not going to have to pay back as much of the loans, of the money that they borrow, which means students will be even more willing to borrow even more money to go to school, which means colleges will be able to raise tuitions that much faster, which means the cost of the program is going to be higher, the losses to taxpayers are going to be greater when bigger loans go into default or when more loans are going to have to be forgiven based on government guidelines. Also talking about slipping legislation into bills, they also slipped a piece of capital control legislation into the jobs bill that was recently passed. And I've been warning, too, about capital controls that they're coming, and this is kind of, the camel's nose under the tent. What this new bill does is it basically says that if foreign banks open up an account for an American citizen, they have to disclose to the U.S. government all the information about those individuals, and if that conflicts with their laws, as it would in a country like Switzerland, then we're requiring those foreign entities to close those accounts and send the money back. In addition, there was a provision that said that the banks, if there is a withdrawal from an American from a foreign account, that the banks need to withhold 30% of the withdrawal and send it to the U.S. government. So this is it. I mean, this is what's going on, and I expect more and more of these types of capital control legislation to be passed without any fanfare, especially once the dollar ultimately starts to collapse, which I think it will. And when that happens and more Americans are looking to protect themselves from a weakening dollar, from domestic inflation, by investing abroad, by acquiring foreign assets or foreign currencies, I think these exchange controls or capital controls are going to be much more interfering. I mean, it doesn't interfere with anything that we're doing right now with my clients at Euro Pacific Capital, because accounts with me at Euro Pacific Capital are domestic accounts. Even though we invest in foreign securities, we do that from an American account. But at some point in the future, what might happen is that the government actually implements controls just on buying foreign currencies or buying foreign stocks. Either they forbid it outright or they impose all kinds of fines and fees that unnecessarily raise the costs of these transactions. Anyway, I'm going to be leaving on Sunday for China. I'm going to be speaking at an economic conference in Shanghai, and when I'm going to be blogging again. And I also just noticed that this thing froze. I wonder if I'm going to use this version or have to record an entirely different one. But what I just mentioned was that I'm going to be leaving for China to speak at an economic conference in Shanghai. Interestingly enough, former President George W. Bush is also going to be speaking at the same conference that I am. And I had the opportunity to meet him. It'll be very interesting to meet him. I've heard he's quite a fun guy in person, even though I had a lot of problems with his presidency. And it'll be interesting if any of that is able to come up in conversation. Anyway, maybe I'll be able to record a video blog from Shanghai. I'll probably try and see if I can get it uploaded onto the YouTube site. If for some reason there are no video blogs, then you'll know why. Anyway, that's it for today. I wish everybody a happy Easter, and I will blog again as soon as I can. Take care, everybody.